Hello, everybody. This is John Hernandez. I'm a CPA and enrolled agent, and I specifically specialize in working with business owners on all things tax, tax planning, tax strategy, making sure that their financials are in order. And today I have a video for you guys around S-corps and how to make sure that you're in tax compliance and you're doing them the right way. This video really is intended for anybody who is currently an S-corporation owner and just wants to make sure that you're doing things the right way, that you're not making any mistakes, or if it's somebody who just opened a business. Maybe you have that new LLC, or maybe your business is making a lot of money and you're thinking about, hey, you've heard about this S-corp. Is it the right time? How do you do it? What does it entail? Right? And you're doing your research. This video is for you. So let's jump right in and we can get started right away. So first thing I want to go over are key tax forms and deadlines, right? Because there are some key differences for S-corps. Number one, and the biggest one, if you've been a sole proprietorship, maybe you were a single member LLC and you were just been doing your taxes the default way, so to speak, then you would have been doing them on your individual tax return, which is 1040. And you would have filed what is called a Schedule C, which is just a one pager pretty much. Very simple, very straightforward. But the moment you become an S corporation, you actually have to file completely separate, independent tax return known as Form 1120S. It's not a one pager. This is definitely a more complex form that really includes many different schedules, has a lot more reporting information that's required. Depending on your business size, you may have to get into balance sheets and M1 adjustments. It can get a lot more complex, and frankly, I always recommend that this form be done by a tax professional. Like, I'm a CPA, I'm an enrolled agent, we do it for our clients. This is not a form that I recommend you do by yourself, just because, again, beyond even the tax, it includes other accounting considerations. And frankly, there's a lot more room for error. Penalties can also be steeper, and I'll talk more about that. But one thing I will say with this return to be aware of, the deadline is different. Since it is its own return, it's actually due March 15th compared to the Schedule C that you would just do with your April 15th deadline. This one actually comes a lot faster. It's due sooner, March 15th, generally speaking. Fortunately, you can extend it. You can get a 6-month extension. It's free. There's nothing wrong with doing that. I always recommend you do that, especially with that this form being so much more complex. So be mindful of that. Going back to the penalties, super important that you either file on time, so before March 15th, or you extend, which would give you up to September. But regardless, you file on time. Why? Because the penalties for 1120S can be very steep, usually a minimum of $200 per month that the return is late per shareholder. So if you have 3 shareholders, that's already $600 per month that you're accruing just in failure to file or late file penalties. So very serious. Definitely make sure that this is being done, preferably by a tax pro. Schedule K1 is the next form, and really it goes hand in hand with it, because K1, usually when we prepare the S-corp return, we're preparing Schedule K1. And this K1, essentially what it is it reports to the IRS, it reports to the shareholder, what the shareholder, in this case the owner, what the income was, what the deductions were, the credits. It's an informational return. But it essentially, and it's very important, because if you had, let's say, 3 owners, right, the business made $1 million in profit. Well, how is that divided amongst the owners, right? Because not every owner is going to get $1 million of that profit, right? So the Schedule K1 breaks it down by owner, which in this case would be a shareholder. And very important, really, it should be prepared and issued to the shareholders by March 15th so that they can do their taxes. So again, we do it hand in hand when we do the return, but just be mindful, this is super important. And then these other ones are kind of a little bit more situational, these next 2, and that's going to be Form 1099 NEC. And this is essentially if you paid an independent contractor, maybe you paid, I don't know, a landscaper to mow your lawn for your business. You paid them more than $600. And now, at the end of the year, so January 31st, so going to the next year, you would have to file what is called Form 1099 NEC, which is an informational return to the IRS saying, hey, we paid, this person earned whatever you paid them. If you paid them $10,000, they earned $10,000, right? And this is the IRS knowing that so that they can tax it. But it's super important, because if you fail to do this, it's a high chance of audit risk. Penalties are also very bad with that. So you definitely don't want to miss those. Honestly, they're very pesky, but you have to get them done, right? If you paid an independent contractor, at least one $600 or more. This threshold is going to go up with the new Trump tax law, but where we are now, it's $600 or more. The next one here, payroll tax forms. Again, this is a situation depending on if you have actual employees. So not independent contractors, but employees, right? Meaning these are employees that you run payroll for, right? You know, maybe they have a time card. You know, with this, there's a lot of compliance burden that comes about because you're going to have to file W-2s at the end of the year, but there are also payroll tax reports that have to be filed throughout the year, like 941s. Your state may have additional filing requirements like for unemployment, their own income tax. Very, very complex and can be somewhat of a burden from a compliance standpoint. So I hope that you're not doing payroll manually, because if you are, you have to do all of these by yourself. And again, you don't want to have payroll tax issues. You don't want to have the penalties associated that can really be a huge issue. So I always recommend that you have a payroll processor do it for you. So like ADP, Paychecks, your own CPA, Paylocity, whatever. You're still ultimately the person responsible, but at least, you know, they're going to be the ones doing it, and you just have to make sure that they are doing it. But they can really simplify that for you. But ultimately, that only applies if you have a W-2 employee, because if you don't have to worry about that. Now, on that note, with S-corps, and we'll talk about it later, as an owner, and if you're also working in the business, you do need to pay yourself a W-2, a reasonable salary, and I'll talk more about that. But that would mean that you would automatically have to do this by default anyway. So just make sure that your ducks are in a row, you're mindful of that, and that you're really, you know, taking ownership of that. The fifth one here, Form 7203. This one is really more known by tax pros, but it is important that you at least make sure it's being done and that it's correct. You know, if you're a shareholder, if you're an owner of an S-corp, you need to track what is called basis, whether it's stock basis, debt basis, but you need to track this. I'm not going to get into basis. That's a whole nother video. It's a whole nother topic. But Form 7203 is a newer form. It's required by the IRS, so they can report to them and let them know, here, this is what my basis is. Right? And it impacts a myriad of things, you know, losses. Can you deduct certain losses? You know, if you sell the business. I mean, there's a lot of impact to it, so it is important, and make sure that it's being done. The next one here, and these are just some common compliance pitfalls to avoid, and it kind of goes with what I just talked about. Reasonable salary, this is a big one. Again, if you work in the business, you'd be considered a shareholder employee of the S corporation. So you're an owner, but you're also technically an employee of your own business. I know it's kind of funny to think about, but that's the way the IRS has it set up. You need to be paying yourself a reasonable salary or reasonable compensation. Super critical. You know, I've constantly seen this with S-corp owners that they're not paying themselves a salary, and that's a ticking time bomb, because if the IRS catches you, they audit you, it would not be good, right? They can apply payroll tax, back taxes at that point, interest, penalties. I mean, just the list goes on. What we do with our clients, we help them do the research and actually determine, based on your industry, based on what you do, your experience, etc., this is a reasonable salary. So that then all they have to do is plug that into their payroll software, and then it goes from there. So they don't have to worry about how do we calculate this, because there is no set formula. It's not a percentage of your revenue or your profit. It's really situational and dependent on your business, what you're doing, etc. So super important that if you have an S-corp already, to make sure that you're paying yourself not just the salary, but that it's also reasonable. Like, you can't just, if your business is making $10 million, you shouldn't just be paying yourself $10,000 a year, right? That's not reasonable. No employee would work for $10,000 a year, especially if you're the only person working in a business making, you know, millions of dollars, right? So again, it has to be reasonable. We talked about filing K-1s and the 1120S, the tax returns late, severe penalties with that. With K-1s, why we prepare them, why I always recommend that a professional prepare them, is because there's room for error, right? If you go in there and you make typos, or you just don't know what you're doing, you could put incorrect information on the K-1s, like allocations and other things, ownership percentages, and that's just going to trigger an IRS audit, right? And again, not something you want. It's going to raise eyebrows. You're going to have questions. Definitely a problem. Missing 1099s. Again, we talked about that. You want to make sure that you hit that deadline by January 31st. That's of the following year. And making sure that at the end of the day, you're tracking who you're paying that's an independent contractor, because you don't want to get to December 31st and then wonder, oh wait, I need to do 1099s NECs, but you don't know who you paid because you weren't tracking that, you weren't doing proper bookkeeping. So what's really going to help with the 1099s is making sure that you're having proper bookkeeping throughout the year, so that you know, okay, you paid 10,000 to this person, 5,000 to that person. And then there's other kind of best practices that I usually advise my clients of, with W-9s, etc. Again, it's a whole nother topic, but just make sure that you're tracking those payments and that you're aware of that 1099 NEC deadline, January 31st of the following year. With the payroll tax delays, payroll tax is an animal of its own. I always recommend, as I mentioned, that you have a professional do your payroll. Please do not try to do it manually. There's just too much complexity to it, too many deadlines to be aware of. You're dealing with the IRS, with the states, maybe with a local taxing agency. So just make sure that you really entrust that to the professional, and that you're just in the loop to make sure that things are being done and filed on time. And if you get any notices from the IRS or anything about payroll, please respond. Please address it immediately. Next one here, just best practices for really having a smooth experience with an S-corp. We talked about reasonable salary. Filing electronically is one I didn't talk about, but nowadays mostly everybody's filing electronically. I don't think there's really too much to talk about that, but that refers to like 1099 NECs, the tax returns, the 1120. Filing electronically is safer, it's secure, and it may even be mandatory. The IRS has mandates for that, like if you're filing a certain number of items that you have to file electronically. So just be mindful of that, but 99% of the time it's going to be filed electronically. And again, I recommend just make sure, it's always ideal that you're filing electronically. Track shareholder basis, we talked about that as well. Staying on schedule, that just relates to making sure you're hitting those filing deadlines. You're not, doing it late, you're not forgetting about it. But the biggest takeaway really for all of this, because if you notice, this is a lot, and I've tried to break this down as simply as possible, as condensed as possible, but you can see that there's a lot of different things. There's a lot of nuance. So working with a professional, an enrolled agent or a CPA, really can help ensure that the tax returns, all those forms are filed accurately. And frankly, you don't have to worry about it. Instead of you having to sit down and spend how many hours trying to figure it out and probably make mistakes, right? Somebody can take care of that for you, right? And it really helps you offset some of that risk as well to some degree. So these are best practices for smooth compliance. Really the next steps is just, put these deadlines on your calendar. That's the easiest way. Business owners, they have so much going on. They have a lot to do. It's easy to forget these, but you put them on your calendar. At least you're mindful of them. At least, like, hey, it's coming up, and make sure my tax preparer is getting them done. Make sure they're not late, right? Check if you even have to do that. Like, do you even have to file 1099 NECs? But at least you have the deadlines, so and especially with the payroll, there's quarterly due dates, and there can be other ones as well. One thing I mentioned here that I didn't talk about was quarterly estimated tax payments. In these, they're not paid directly by the S-corp. They're going to be paid at the individual level. But it is important, and if you're an S-corp owner, be mindful of that. I'll probably have to do a separate video just on quarterly estimated tax payments, but know that depending on your tax situation, you may have that additional obligation of making quarterly estimated tax payments, federally or state, what have you. So just definitely pay close attention to that. And then again, professional consultation is really going to help you simplify this, streamline it, and make it easier for you. So I'm always available. Like I said, I work very closely with our business clients on anything S-corp related. I'd consider myself an S-corp nerd, so feel free to reach out to me. I'm going to put in my information in the description, and we can go from there. Thank you.